Well, hey, everybody, we're here with Derek and Timothy and whoever else wants to be a part of this fun little review that we're going to do. So the reason why we're reviewing this trade is to kind of help overall get a plan in place as you're reviewing a trade and say, is this a good place to get in and why? So we noted there's a bunch of indicators, ideas that we have as traders that fit our zone. Well, this trade fits my zone and my eye, and there's so many reasons why I wish I was trading at this time and why I would have gotten in. Do you see anything, Timothy?
Yeah, I think I see all the confluence that we're showing up here about the EMAs crossing, about to cross coming together, and the pullback that we've got that we're liking.
Mm-hmm.
The fact that it's staying in the channel, most of what you have written up there, and possibly the formation of an Elliott wave going on. So
Yeah. So we're looking at, one of the things is we came up to the 200 period after, a nice pullback. We had a peak, right at the opening bell time, right before opening bell. We've had a run down. If you want to look at an Elliott wave pattern, we had a 0 to a 1 down here, a 1 to a 2 to a 3 made a lower low, and then a 3 to a 4. So we're at an Elliott wave 4, which if this is a true Elliott wave pattern, the next 5 is going to be down somewhere in the 37, 35 area. We're still in a channel, which is a really good sign. We're going to close right on it, but with a little slough. We're going to still be in it. We're going to see if this double taps on a 200 period EMA double tap is a really solid signal to continue with the trend. The EMA, one of the things that we've been working on is EMA crossing other EMAs longer term. And when you have the shorter terms crossing the longer terms, that's usually a helpful signal that we're in a continued trend. And in this case, the 21 period in this golden rod had crossed the 50 and it's just about to cross the 89, and then it's just about to cross the 200. So it's a little bit premature, but it's predictive. And that's a good sign as to how steep it's coming down. We had a 50% Fibonacci retracement on the low to the most recent high, right almost at 50%, and the close was about 45%. So that's a really good signal. That's a great spot, golden zone to get in. And we had no wicks or closes in the last 40 minutes that penetrated the 21 period that was coming down. Another solid sign that you want to look for in trading with the trend. And just a little side note, the previous peak right here on the RSI, we had a peak back here that you can see is way up here. And this move up, right, was a substantial move, but it hasn't even come close to the higher high. So that's a little bit of a divergence right there as to saying, this didn't have as much, oomph. We should have been way up here if the oomph was the same, is what it's saying. So I think a really good idea, and I've done this with Paul and many other traders, is when you're about to enter a trade, is you have somebody else say, "Hey, prove to me that this is better going the other direction." So what would you say about a long case here, Tim?
well, I think one of the points that I was going to make about a long trade here is that I don't see there's so much confluence, and I think about, well, if I thought about going the other way, what would I see other than this very short-term move up? But in order to go long, I'd have to think I'm going to break a channel. I'm going to cross a 200 EMA.
Mm-hmm.
I'd be asking a lot. I do have some headroom.
Mm-hmm.
My stop would have to be really large. So for me, asking the question and finding few reasons to go long is just a confirmation.
Yeah, I really like that. And let's say that we did go short. Where would you put your stop in this situation? Not saying, how you trade personally, but if you had unlimited funds or whatever, where would you say, ooh, you know, when it goes past this point, wherever that is in your mind, would I say I'm done with, I'm out of this trade? Because it could go against us, right? We're probably, this is, in my opinion, this is probably like a 65 to a 70% trade, you know? So it's not 100. So where would you consider putting a stop? And
Well,
have me point if you don't know, like, where do you want me to put my cursor?
yeah, if we're talking about potential entry at 69 or so,
Mm-hmm.
um, I'd like at least to clear those. You've got a lot of action right about it. It's hard for me to tell what you're, yeah, just a little higher than that. Yeah, right in there
Okay.
would be a place that I would, there's still wicks. If I really, like you say, I probably want to clear those 3 wicks too that you see
Mm-hmm.
above all that action.
Yeah. And so that, which is ironic because what's the average price candle right now? 57 to 71. You've got, you know, the prior one to that was 51 to 64. So we're talking 13 to 15 point candles, right?
Right.
And yet you're only looking for a 7 or 8 point stop, which is half of the average candle size. You could also play it really close and say, you know what, we've had one touch right here at 79.50 where the wick touched the 21. So one way to play this is say, you know what, if this comes up and breaks the 21 period EMA, I'm out. So you could take a very short attempt and say 73.50 or something like that, where, and that just basically gets you outside of the upper, the 10% extreme on the channel. That is one way to do it, right?
Yeah,
And that keeps
yeah,
you really safe.
that keeps you very safe, and it also, if I'm thinking about it right, that allows you with that short stop and that to possibly go at it again.
Yes, absolutely. And so you don't go crazy, you don't get
Right.
cortisol levels don't go up. But then that I think I'm with you that 77, 78 area to me, you know, is really like kind of the golden spot. Now to be really safe, I would want to be up at 82, you know, like up right
Sure.
here at this break from this double tap to this bottom to clear that. So say 80, no, that's 84. So now, but now we're literally in that 14 point candle, which realistically, again, you should have your stop set about the same size as the average candlestick. So when you got 15 point candlesticks, your stops should really be 15 points. So in a way, you either got to play really conservative here and just go for these little minimal stops, or you got to be a big boy if you're going to play in this market, and you got to put your stops where they belong.
One of the things you have to think about, to me, if you're going to play it that way and have such a big stop, is what are you asking for then? With your risk management, you're asking for a lot.
You are. Yeah. Yeah. You have to be if you're a 15 point stop, you have to be at least a 17 point gain.
Yeah.
So, but you know, it's kind of like, the more that I think about this, I like the shorter stop, because if it does break this channel, which we'll see actually later on in the day, then the move up is going to be fairly violent. And it could even take out that, 85, 80, area. So
yeah. So the shorter stop also allows you to change your mind and say, oh, this is such a clear signal down that if that 180 that we talked about, if it goes 180 and doesn't do what you think it's going to do, that helps you.
I like it.
So, yeah.
Well, hey, awesome. Thanks for this, Timothy. This has been a good little session. We'll post this video later, and hopefully this will help you become a more profitable trader. The idea is, at the end of the day, when you look at your track record, you want to make sure that your average gain, your average profit, is always higher than your average loss or stop out. And if you can do that successfully over the course of a long period of time, you're going to be a successful trader. So thanks for being with Futures Networks Live, Timothy, Derek, and anybody else that wants to comment later. And we'll do another video in a second. Thanks. Bye. Well, hey, thanks. We're back with Timothy and Derek, and just wanted to go over just a neat little recap of what happened and why this was a good trade to get into. And let's pull this up real quick. And just to say that it did stick, you know, it didn't come up even to the 21 period. The 21 period did cross the 200, and then it just started going violently down. It hit 35, which is crazy. Oh, it even went further. It even went down to 28. So I would have gotten out at 35 because that was the 100% area of the channel. It just confirms that everything that we were talking about, guys, was, you know, the reason behind all these. Here, I'll move this to the bottom side of this so that we can blow this channel up a little bit. It was overall, all the things and the reasons that we talked about were a solid reason to get into this trade. So anything you just want to recap on this, Timothy?
It looks good to me, and I remember us trading this trade and having a good time.
Right on.
Going to continue short.
Nice. So thanks for watching. You know, these are the kind of trades that can make not only your day, but your week. Because think about this. If you did get in at 69, you know, right at the close of this one, and you wrote it down to 35, even on one contract, you know, that's a lot of points. You don't even have to add them up. That's just a lot. And that could make a week or a month in some people's cases. So trade safe out there. It's a crazy market. Watch Futures Demore, Futures Networks Live. You're welcome to come here and collaborate with Timothy and Travis and Chris and Rob, a lot of others that are really helpful and good people that are trying to help us all become more profitable traders. So thanks so much. We'll go over another video in a bit. Have a good day.